everybody can hear me okay. Good afternoon and welcome to the Cinco de Mayo version of the Power and Utility Tax Academy. My name is Scott Jackson. I am a managing director with KPMG. I sit in Atlanta to the extent that matters anymore. Hopefully it'll get back to mattering here pretty soon. And I'm a core, indirect tax professional, sales and use tax, gross receipts tax, transactional taxes. Been doing it for about 20 years. We have a great agenda today. We have received some feedback related to prior sessions, and so we have kind of tweaked our approach. Hopefully it works. Hopefully it makes things more interactive. But more on that to come. I'm going to turn it over to Emily to introduce herself.
Hi, thanks, Scott. I'm Emily Goche, a senior manager in the indirect tax practice at KPMG. I actually reside in Pittsburgh, Pennsylvania, but spent most of my career down south in Baton Rouge, Louisiana. I have 17 years of sales tax experience, 10 years of which have been primarily focused on the indirect tax issues within the power and utility space for both regulated and renewables. So it's great to be with you all today. Patrick?
Yes, thanks, Emily. So Patrick Loynes, I'm a managing director in our Houston state and local tax practice. Been with the firm about 10 years now, but focus really on all kind of three areas of power and utilities, both retail, electricity, transmission, distribution, as well as generation. And I feel like most of the U.S. at this point. Work in the refund space, audit space, as well as consulting and planning and technology space. So really kind of your core generalists for sales and use tax, for power and utilities, as well as the other excise taxes that do pop up. And Mike?
Perfect. Thanks, Patrick. Name's Michael Senna. I'm actually a principal based out of what we call our Tax Ignition Center. And our Ignition Center is actually a technology innovation lab that really helps provide both service improvements to what we do internally here at KPMG, but also working with clients such as yourselves to, again, leverage technology and process changes to make things bigger, better, faster. So been with the firm for 20 years, again, have been heavily involved specifically in indirect tax for some time. So, we'll be talking later about some technology concepts, ideas, and what's going on nowadays.
All right, thanks everybody. I think we can go to the next slide. Here are our learning objectives. We can skip over the learning objectives, that's fine. The agenda today, we're going to talk about some industry trends to start things off, with obviously a twist from the sales and use tax side of things. We're going to get into some tax technical updates. We're going to talk about bad debt refunds because obviously that's very important given the amount of bad debts that were realized during 2020 related to the pandemic and the moratorium on turning off utilities. And then the main way we've changed our format today is that we've added a peer-to-peer conversation. So we have volunteers from the indirect tax functions at all the different companies, and they're going to spend some time, kind of sharing their thoughts, and hopefully, it'll be a great interactive conversation, and we'll even get some kind of Q&A going back and forth. Then Mike's going to take over, and along with Emily and Patrick, we're going to go through some overall innovation trends, and then we'll get into some case studies. So some areas where, KPMG has helped clients, apply some innovation. All right. So before we go to the first polling question, hopefully it's not the first polling question on the poll EV yet. Please, 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 and I think everyone's been through one of these academies before, but please make sure that that you check yourself in to poll EV because there is some rigidity around using that functionality as it relates to CPE.
And we're good to push that out now?
Yes, please.
Great.
Okay, so we just want to know kind of what's your primary responsibility within the tax function. Is it sales use, other transaction taxes, federal income tax, state income tax, property tax? I think if that's going to give us some results. We don't have the interactive functionality set up because that gets a little clunky.
Sure, absolutely, Scott. Looks like the majority have responded B, federal income tax, with A, Sales and use and other comparable taxes is a close second.
Okay, well, that's good to know. It's always good to see those federal income tax folks with an interest in indirect tax. So let's go ahead and move on to the next slide. I think we can advance two more. We can skip the next one and go to the one after this. There we go. So I wanted to talk a little bit about trends that we're seeing in the industry. As you can see here, the overwhelming investment in generation for 2021 is expected to be, in the renewable energy space. So we're talking wind, solar, and batteries. About 80% of the planned, investment for 2021. Now we know that, Biden's plan, the infrastructure plan that he's proposed and the direction he's headed is going to continue to promote, renewable energy, through, federal credits and incentives. And we also see, kind of a lot of pressure coming from corporate America. A lot of ESG pledges out there, that's environmental, social, and governance, that E for environmental. There's a lot of net zero carbon emissions commitments being made. So what does that mean for the indirect tax function? Well, that means that a regulated utility can have a lot of projects outside of its little geographic space. Yeah, it can be doing business and investing in renewable fields all around the country. So then who's responsible for the indirect taxes? And is the person responsible for indirect tax familiar with the indirect taxes in those other jurisdictions? There can be a lot of issues related to managing contractors and contractor spend. There's a lot of really exotic kind of investment structures related to some of these renewable projects. So it really does introduce, a new but significant form of investment for a utility that, somebody has to manage that indirect tax for these new renewable fields. So moving on to the next slide. I think kind of the other thing we're seeing is, there's a lot of decommissioning of older plants, decommissioning of nuclear and older coal plants. So how does that impact indirect tax function? Does the decommissioning change the application of the manufacturing machinery and equipment exemption for power generation once a plant stops generating power? Is there a greater emphasis on pollution abatement exemptions? Does the existing accounting and tax automation support that change with the new exemptions, or the conversion from a manufacturing related exemption to a pollution abatement related exemption? And then of course you also have contractor issues here. Is there increased contractor spend? Does that create an increased need for tax involvement with contractor negotiations? More manual review on those contractor invoices. So these two trends really, they're happening this year. They're going to continue to happen. They're likely to happen over the coming years. And they really do touch the indirect tax department directly. So moving on to the next slide. So I'm not going to spend too much time on these next slides, but we did want to, we have a polling question, I forgot. Let's go ahead and do the second polling question. So just a question about whether or not your tax department is involved with tax planning for renewable projects, planning and compliance. And Yvette, just let me know when results start coming in. And my dog just sneezed, so hopefully that's not a sign of things to come. She's usually pretty quiet.
All right, Scott. Looks like the majority have responded A, true.
Okay, well, that's great. That's good to hear. So these next slides, we're not going to get into a bunch of technical details around the different types of indirect taxes. Did want to make it clear there's going to be a separate section of the Academy devoted to property tax. So today, we're talking about sales and use tax, sales on, sales of electricity, or, transmission distribution services, use tax exemptions on, kind of those same types of investments, on manufacturing related to power generation or equipment related to power generation. And then of course, to a lesser extent, transmission and distribution. If we want to advance to the next slides, I mean, there are gross receipts taxes, oftentimes we see utilities charge those through. And the next slide, we see excise taxes, very similar to gross receipts taxes, maybe the tax base is different, but again, something that, we see utilities, charge to their customers. And then there's kind of a catch-all bucket if we go 3 slides ahead. Just a lot of different indirect taxes. And, there's complexity and there's different impositions at the state and local levels when it comes to a lot of these taxes. So certainly all within the scope of the conversation today. If anyone has a question and wants to ask about these. But again, we're talking about sales and use tax and transactional taxes, not property tax so much today. So with that, I think I'm going to turn it over to Patrick to get us kicked off on the technical updates.
Awesome. Thanks, Scott. If you can go to the next slide, we're going to walk through 4 or 5 different technical updates for a few different states. The first of which is a big case. Not sure how relevant Texas will be for the audience today, but I think there's some major takeaways from this, both for future planning as well as looking at how this might be treated in some other states. So Hagar versus El Paso Electric Company. El Paso Electric in Texas, as you all may be aware, Texas is a deregulated market, meaning we have competition at the generation level, the T&D level, and retail level. And of course, Texas, has made the headlines in the last couple of months, as many of you are probably aware, with some certain cold weather spells that came through. But El Paso Electric is a transmission and distribution company, meaning they're the poles and wires company, poles and wires aspect of electricity. And there are smart meters that are located at individual customer homes that historically have been taxed by the department. And under this Court of Appeals decision that was handed down late last year, the comptroller and, of course, has contested this. But for now, the Court of Appeals decision is that those smart meters that are incorporated at customer homes are deemed to be telemetry equipment, which actually falls under the manufacturing exemption in Texas for sales tax. Meaning that the big takeaway here is that even though we have a transmission and distribution company that's not involved in the actual generation of the electricity, they are still subject to the manufacturing exemption should they have property that fits in that bucket. And those meters are in a way related to step-down transformers, which would qualify for the exemption. So outside of Texas, I think the big takeaway here is that, we're looking at meters and the other equipment outside of the, traditional manufacturing spaces maybe fitting into that exemption. And in states that might include telemetry within a manufacturing or processing type exemption, this is something that should be considered. Just as an FYI, this case is still being appealed by the comptroller, but it's actually being appealed on a procedural issue as opposed to a taxability issue. So we expect to get confirmation probably in the next 60 days that either the determination will become final and they won't be granted a second pass review, and that taxability decision will be final with the department. And you can go on to the next slide. So this next is a letter of findings from Indiana that was handed down late last year, I think December of 2020. So Indiana, similar to Texas, has a direct use manufacturing/processing type exemption. And this was, I guess, a bit interesting in that, a company was trying to file for refunds on basically the construction of a battery facility that would potentially store electricity. And, I think the takeaway here is that, they were denied the exemption on the equipment that, was used to construct this battery storage facility. But number two, I think we're seeing kind of opposite takes on this state by state. And so states sometimes have a direct use exemption, and walk through an example of that next. But states that do have a direct use exemption in other areas have approved, that materials used in a storage facility may still qualify for exemption. But Indiana has taken a separate position and argued that, the storage is downstream of any production and therefore not subject to the manufacturing exemption in Indiana. And then you can go on to the next slide for Arkansas. The last for Arkansas is an opinion. So again, opposite in what Indiana concluded in their letter of findings. Arkansas has actually granted the manufacturing exemption. So even though they have that same direct use language, the department has approved non-taxable treatment for support pilings for solar panels. It could include transmission wires and conduits and transformers and SCADA and switch yard and transmission lines, which I think in a number of states, Texas included, they would look at those as kind of one step removed from the manufacturing process. But in Arkansas, you've got some favorable treatment there for taxpayers. And so I think the takeaway from really the three of these is that as utilities are starting to look into the alternative energy and green energy space and looking at solar production, you really need to take a state by state look to see what components of that facility are going to fit under any sort of exemption. If it's manufacturing and it's a direct use language, the state's probably going to side with taxable treatment for a lot of that equipment. But if you're fitting it under some sort of alternative energy or generation type exemption, you might get more favorable treatment. And then you can go on to the next slide. And I think Emily might walk through these.
I think I'm going to jump in, Patrick. Thank you. This Iowa declaratory order is important because it's a revenue side issue, right? So, I mean, you don't want to get the tax wrong on your revenues. You don't want to get tax wrong on sales for a lot of reasons. Number one, it adds up quickly, but this is actually kind of a reduction in the tax base. An issue can add up quickly. This is a reduction in the tax base. So, you can open yourself up to those kind of class action lawsuits related to, overcharging sales tax. So Iowa has a trade-in exemption. I think that, this industry is very familiar with trade-in exemptions. I know over the years, I've been involved with a lot of planning opportunities related to trade-ins and power and utility assets. In Iowa, the ruling really hinged around renewable energy. So, the utility, sells electricity to a resident, but then the resident or business actually, gets a credit for the solar electricity or the electricity generated by the renewable asset. So because the trade-in allowance applies when, the traded-in item is provided to a company that sells that during the normal course of business and intends to sell it, then, that credit for renewable energy provided back to the utility is actually an offset to the tax base and reduces the tax base. So a consumer-friendly decision, but certainly something on the revenue side that, utilities need to be conscientious of. Again, back to Patrick's point, as we see more and more renewable assets, these are the areas when you overcharge sales tax that can really cause those class action lawsuits. All right, moving on to the next one. I found this one really fascinating because, again, over the years, I've seen planning opportunities related to, contributing assets to a company outside of a state that would tax the asset, and then you bring that asset into the state tax-free. Well, that's pretty much what this Georgia private letter ruling, it seems to be about. It's about staging renewable assets, renewable energy assets, storing them in the state, and then contributing those assets to, a related party. Would that storage be deemed a taxable storage or use? Now, when I first saw this, I was really hopeful that the department would rule on like a temporary storage exemption because that's a gray area in Georgia. But instead, they simply said that, look, these assets qualify for our manufacturing machinery and equipment exemption. Therefore, the storage and use of them is exempt in the state of Georgia. That contribution in the state is fine. It's also exempt. And then, of course, the assets are going to be used outside of the state. So it was a favorable ruling, but it definitely speaks to, those planning opportunities related to contributions outside of states that may tax, certain power generation assets. I think we're going to move on to the bad debts conversation. Oh, another polling question. Ben, if you want to go ahead. So in Patrick's case, the first one we started off with, El Paso Electric Company, it was found that the following are exempt under the manufacturing exemption. This is a real question, so we're going to see how many people are paying attention on Cinco de Mayo.
Scott, the interesting thing on that credits question is net metering. As we look at that state by state, we're getting different answers for different tax types. So, you may get one answer for sales tax and a different one for gross receipts or utilities tax.
Yeah, that's a great point. And not every state has, that mechanism. And those mechanisms were highly sought after, about 10, 15 years ago when we were doing all the planning work around them. All right, what are our results looking like?
All right, Scott, looks like the majority have responded C, meters, with B, solar cells, a close second.
Patrick, great job. They're paying attention. Thank you, everybody.
All right, bad debt refunds. You can go to the next slide. So bad debts have always been an area of concern, but primarily have become a larger focus since March of 2020, since all the COVID shutdowns. As we all know, the federal government put in utility moratoriums so that you can't turn off people's power, even if they're not paying their bills. And so the question becomes, what's going to happen with all these back owed bills? Are they going to become write-offs? Well, you've already billed, you've already remitted the sales tax if you're reporting on an accrual basis to the government. So now what? And so, like the slide mentions, I think we're estimating somewhere north of $40 billion of potential bad debts. And the states do allow a mechanism for taxpayers to go back and recapture any funds that have been remitted on behalf of another party. Because as a retailer, when you issue your bill and charge the tax and remit to the state, when it's not paid back to you, the states allow you to either file a refund claim or in some cases take a credit or some other specialized refund to capture this amount back. These are statutorily protected items, so they're not a question of taxability whenever we look at bad debts. And the reason why they're statutorily protected is because the tax was never imposed on the utility or a retailer. It's imposed on the person who didn't pay. And so we try to, go through these periodically. We always recommend people review them at least annually. A lot of taxpayers look at them monthly, but now that we're going to have this huge uptick, what do we do with this? And so if we can go to the next slide. And so as we do a review of bad debts, the question becomes, what's going to actually trigger a bad debt for sales and use tax purposes? And this can be a couple different things. Our favorite word in state taxes, it depends on the state. And so the states will look at potentially what date was it written off for federal income tax purposes? What date was the account actually charged off? Some will, look at, I think, if it was, written off like on an annual basis, so they'll follow like an annual statute of limitations. The states are kind of all over the board, but majority of them are, when did you write it off for federal income tax purposes? And that is normally your triggering point to be able to recognize the bad debt. And then, the next piece we need to look at is, well, is it really a bad debt for sales and use tax purposes? And what information do we need to capture? So if we wrote it off for federal income tax purposes, then for state sales and use tax purposes, we need to be able to capture how much of the write-off was actually sales tax, how much of the write-off was maybe like either charged back or collected, or did it go to collections? What was the invoice date? And what was the payment date? Can we get back to a customer name and address? Do we have the history of the account, or was this debt sold in any type of transaction? Is another key point to look at for bad debts. And once we've kind of gone through this whole exercise and said, okay, we know we had a federal income tax write-off, and we know we can capture all these fields for a sales and use tax write-off, and we actually have an amount that we can tie back to a customer account that wasn't put back through collections. Well, then we can look to the mechanisms to actually filing the claim. And once we push these claims through to the states, like I mentioned earlier, these are statutory. So we're not, going back and forth with the state over, well, was this a taxable transaction or not? It's just a matter of proving out data-wise that it was truly a bad debt and you paid the tax on behalf of a taxpayer. And so some states will allow like a credit on your returns. Some states ask for amended returns, but a lot of states actually have a specific procedure for filing a bad debt refund because they don't want it mixed in with your actual return. And so, I think as we look into, coming out of this past year and what's going to happen with all these uncollected accounts, we've heard chatter that maybe the government's going to be, issuing funds to help cover, or taxpayers going to go back, and do some kind of payment plan, or some, once we can start collecting, willpower just get turned off because they're not going to pay. And so I think, really over the next probably 12 to 18 months, it's going to be a focus on trying to sort through all these different scenarios on a state-by-state basis to figure out what the best solution is to really tackle all the uncollected accounts over the past year. Next slide. I think is a polling question. And so which of the following is true regarding bad debt refunds? Generally, the bad debt does not need to be written off for federal purposes. All states begin the statute of limitations from the day the bad debt was written off. There is little opportunity for bad debt refund claims in the public utility space, or most states require basic customer information to claim a refund. And I think while we answer this question, the next section, we're going to really get into conversations amongst the group. So we do want to make sure, as a friendly reminder, we have to get through all the polling questions for CPE, as well as don't forget to sign out at the end of the class.
Thanks, Emily. Yeah, that hopefully everyone answered the last polling question. I know that one flashed up quickly. We want to make sure we give everyone a chance to get that answer in. But yeah, this is a fascinating topic because, Emily, like you said, I mean, the utility is the biggest taxpayer in the state, in most states. So, these bad debts, they've obviously impacted the industry, but, then, how do they get, kind of passed back to the Department of Revenue? So, tax that was not paid, not collected by the utility can be recovered. It's definitely it's going to have an impact, for at many different levels. And there are some states that, that like Emily said, you got to get those bad debt refund claims in a period of time that's shorter than the typical statute of limitations, which is something that could catch you off guard. Now, I do suspect that, most retailers in general and utilities have a way to kind of automatically account for those bad debts, but, last year was different. So I'm sure there's some different accounting treatments out there that may not flow to the tax returns. Okay, we can go ahead and skip. I just wanted to make sure everyone had time to get their polling question in because everyone wants those CPEs. We know they love listening to us, but CPEs are very important. So client conversation. So unfortunately, I had a late scratch from Bill McBriar Ameren, but that's okay because we have 4 other amazing people that are going to join us today from Con Ed, Dominion, National Grid, and Southern Cal Edison. So I was hoping that Joe from Con Edison would be willing to start us off. And the format here is kind of free form. We have a Q&A box, so please, drop any questions that you may have into the Q&A box. We'll be able to see it. We've asked everybody to just come forward and share some thoughts about their indirect tax function. And we really want to hear any questions that they may have for their peers. I think that this Power and Utility Academy is supposed to be a platform where you all can kind of learn from each other as much as you listen to KPMG talk. And so we're really hoping to kind of gin up that conversation through this peer-to-peer talk here. Joe, if you're ready, please go
Yeah,
ahead.
no, I am ready. I'm happy to talk about the most interesting tax, sales and use tax. And since everybody else is on mute, I won't get any arguments there. But it does, sales and use tax does touch every department in a company. So in my mind, I think it's the most exciting and most interesting tax around. But I'm not going to keep a lot of take up a lot of everybody's time. But again, KPMG did ask me to talk about some actions that Con Ed is embarked on to make our sales and use tax processes better. So what I find is I find I often talk about two topics: revoking the direct pay permit and automation. And revoking the direct pay permit, especially since the Wayfair decision, and it seems like it was just yesterday, but it really happened way back in 2018. There's been an initiative by Con Ed to no longer have vendors coded as self-assessed, thusly removing the use of the direct pay permit. And for those of you that are keeping count here, we Con Ed primarily, most of their transactions are New York State based. So to give you an idea of how the proper use of the direct pay permit is outlined, it's in Tax Bulletin ST 163. And the direct pay permit by regulation is used for items when the taxability cannot be determined at the time of purchase, such as items going into inventory. And really coming from the tax bulletin, it says when the business is unable to determine at the time of purchase how otherwise taxable property or services will be used. So that's primarily when the direct pay permit is in play. And historically, Con Ed has used a direct pay permit for many of their purchases, their transactions. And so there's a couple of things to consider when we're talking about Con Ed, and probably many of your companies as well. So Con Ed has thousands of vendors, and sometimes they're duplicated in our system based upon the company, right? We have not only, Con Ed, the main company, but we have Orange and Rockland as well. So you can have thousands and thousands of vendors in the system. And over the years, too many were given the direct pay permit. And to give you an idea as to why we have so many vendors with the direct pay permit, as a new vendor is added to our Con Ed transaction list, new vendors are initially coded as self-assessed, the DPP enabled, right? But it's not until a later review where the DPP is revoked when it's applicable. And Con Ed, just to give you an idea of how many vendors, Con Ed adds a couple hundred new vendors each and every year. So it's just a never-ending review of vendors. And again, as soon as they walk through the door, they're coded as self-assessed. They're given the direct pay permit. So what's been some of my actions, my department's actions? Well, we reviewed the obvious vendors, the vendors that don't have items going into inventory or which tax can be determined at the time of purchase. The responsibility of paying sales tax, once we get rid of that direct pay permit, we revoke the direct pay permit, it now resides with the vendor. And the way I feel is, who knows their product or service better than the vendor, and then they can charge us the tax. The responsibility of collecting the tax resides with them. But there's been some pushback over the last couple of years since Wayfair. pushback's been by the vendors. They're not registered to collect the sales tax, or there's not enough sales for Nexus. Many times I've heard we don't have the staff. Well, that really isn't, a legitimate answer to not collecting sales tax. But in New York, even though you may not have a physical presence, and this goes throughout many different states. For New York, if the gross receipts from TPP, tangible personal property, delivered into the state exceeds 500,000, and this is the big one because not every state is the and, if more than 100 sales of tangible personal property is delivered into the state, then you have Nexus. But not every vendor is so keen on collecting it. So again, like I said, there's been some pushback, but it's been the right decision because we know we're on the right track, and just recently New York State issued an advisory opinion, and again for those that are keeping score here, it's TSB-80-20. Which is an advisory opinion on guard services, and this one really it hammered it home for me that said that Con Ed is correct in revoking direct pay permits. So per this TSB, it said if the vendor has knowledge of the location to which its guards will be dispatched and the location where services will be performed, a direct pay permit cannot be accepted routinely by the vendor for every sale. So, it just really confirms to me, and it should to you, that the direct pay permit cannot just be given to any vendor. Those rules have to be in place. Let me see. So again, we know we're on the right track. At least Con Ed is. So the permit. So one last thing regarding the direct pay permits. The permit must not be used by the purchaser, and the vendor must not accept the DPP regarding that TSB, and any sort of purchase where it's possible to determine the manner in which the purchase will be used, where the purchase will be located, and the direct pay permit is not applicable in those cases where where the location will be. So some final thoughts on the direct pay permit. It must be noted that again that these TSBs are important. So New York State set forth, again, for those of you that are keeping score, TSB A-98. This is one that's important. The misuse of the direct pay permit by the holder may be ground for revocation of the permit, and that as the states are looking for more and more money, they're going after not only the utilities for sales and use tax, but they're looking for they're going to the vendors as well, and looking for the direct pay permit and where it's being used with the transaction. So you certainly don't want your direct pay permit revoked. So that's all I got on the direct pay permit. And the other one that I really enjoy that has been a big topic in not only my company but many other companies is automation. So Con Ed is implementing automation when we see an opportunity. We've utilized software such as Blue Prism. We've used Alteryx. We've used it to streamline manual and really mundane processes. But for me, I'm really excited with the use of Excel macros and other Excel tools. Macros have been out there for a long time. What I find is it's easier to use macros. You have more control over using macros, and there's other tools like conditional formatting that you could use. to just really just to make your life easier. It's besides the savings, the time saving aspect of automation. It also reduces what I find. It reduces and eliminates user error. You know, I'm old school, so and probably everybody here is still using Excel spreadsheets, but those hard coding cell issues, you never get those if you automate correctly. So I find that automation is just something that really has been just a godsend for me. It provides the users of other data more opportunity to review more opportunity to review rather than going through thoughtless actions, and that's really key. A lot of it is just tons and tons of information that we have to go through every day and throughout our process, and it's just mundane, thoughtless work where if we automate it, we can use that time to review the work instead of doing those thoughtless processes. Just wanted to give you an example of what Con Ed has done in regards to automation. So we have Con Ed has a vendor review process that tags transactions based on various variables. The most obvious variable is vendors, specific vendors. So what we did was we created, with help of a vendor, what the process goes through. This automation process goes through is thousands and thousands of vendors and flags where a taxable vendor when there is no tax, and when there's an exempt vendor and there is tax. It's just obvious, but when you're going through hundreds of thousands of transactions, hundreds and thousands of lines on an Excel spreadsheet, it could be tedious. But when you create automation, it takes all that extra tedious time, all those tedious tasks. It goes away. So just to close out, by utilizing automation processes, Con Ed, the sales and use tax group were able to identify over and under accruals before they were reviewed upon audit. And the great thing about this automation process that Con Ed created was it's adaptable. So you can add, remove, and edit variables when needed. So as a new vendor comes aboard, they are added to the automation process. So that's all I got. And those were the two items that I find incredibly interesting, and I'm really excited about it. So thank you all for your time, and if you have any questions, I'm here.
Yeah, there was a question asked. Someone wrote in saying that Con Ed used to post its DPP on its website. Is that now removed from the website?
Not that I know of. It should still be there, but I'll check.
Okay.
Joe, that was great. I really appreciate it. I'm going to ask Esther from Southern California to come up next. But Joe, that sounds like a real headache about the direct pay permit in New York. I know that some states have the exact opposite approach. So it's creates a unique amount of work for you, and I'm sure it's not easy to do. Esther, are you on?
Yes, I am, Scott. How are you?
Yep. Yeah, thank you for joining.
Thank you. So some of the issues I wanted to talk about, it does have to do with automation and systems. One of them, a pain point is something related to overpayments of taxes for what is actually what an invoice says and where something's actually delivered compared to the actual work order that a purchase is coded to. So, Edison is located in Rosemead, California. It has a higher tax rate than many other cities or counties around it. So we do have purchases that, are coded to our higher tax rate at Rosemead based on work orders, I guess for accounting purposes or internal tracking purposes. But actually the purchase, for audits, when we look at an invoice, we find out that the purchase is actually delivered in Orange County, which is a lower rate. So, as a result of that, we get audited every year by the state. We know that there's overpayments. We know it's an issue. So it's just a matter of trying to find a way to, identify these overpayments automatically. There's something in our system where I guess the way it's configured is that the tax rate that is being accrued is the work order in a certain tab, but there's a separate tab that shows a delivery address. So right now we're trying to figure out a way, can we get more accurate, tax accruals by having the system getting configured to the delivery address? So currently our IT is looking into it. We use both SAP and Ariba, and they're trying to see whether or not we can, get this change implemented both through SAP and Ariba. So it's something that's in progress, but we know this overpayment is there. I guess it's better than having underpayments, but it's just one of those pain points that we're working through right now. I don't know if other people have similar issues with their systems, with taxes being accrued at incorrect rates, but it's, nothing that's huge, but it's enough definitely to look at. So that's something that, working with IT, AP, hopefully, we can find a solution. I'm not sure if anyone else has issues, but in terms...
Yeah, sure. I've certainly seen that with other clients. There's no doubt.
Okay. Mm-hmm. And in terms of audits, right now we're going through, pandemic. We're working remotely. We don't really have that face-to-face contact. Right now, the audits that we're going through right now, it's just completely remote where we're just emailing each other. We might have meetings on Teams, but I think we're missing that face-to-face relationship that you can have with the auditor if you just have like a, meet in person. And we had that in the prior audit cycle. And I don't know how other people are going through audits right now. I mean, I'm sure no one's really having that face-to-face conversation where, you kind of you talk about things that are outside of the audit, and then you can kind of, form that relationship. And then you can probably, when you have issues, you can actually, when you have that personal relationship, I think it makes things easier instead of just, seeing emails, seeing like people's positions. That's the part that I think is lacking right now. That's another pain point, but maybe eventually, when we get back to the office, we could have possible in-person meetings with the auditors, if possible, and, just keep that relationship going. I don't know how it is with your clients or other people, what utilities are going through with their auditors. But I know right now with our auditor, we have not really met her in person. So it's a little bit difficult, but, it's something we're working with.
Yeah, I think that's a great point. We always train, our people to give the auditor everything they need, but, don't let them get too comfortable. Well, how comfortable can you get when you're working out of your own home? Yeah.
Right. So,
hi. Can I ask a question? Hi, Esther. This is Adi Acosta from National Grid. Have you considered utilizing, things like WebEx and Teams to meet with auditors? We've had several meetings with New York City auditors via Teams, and that seems to be going, pretty well, at least in terms of conversation, being able to discuss the issues. And so the technology, is available, and the state or tax authority does have the access to some of these tools. So maybe that might be a consideration to utilize the web features to have meetings, even though you can't meet in person.
I think that's a great idea. I think I'd like to initiate more in-person calls instead of just emails back and forth where she comes up with her position and, we just have to write back, what our position is. So that is something I'd definitely like to look into, especially since we'd like to wrap our audit up and, and kind of keep her on her toes to, if you don't have those in-person meetings, I think sometimes you kind of lose track of, you just want her to remember that, hopefully that she can focus on your audit. So that's a great idea.
Hey, this is Emily. I'll say the other thing, I find that's worked well is because we are all remote and you're not getting those in-person meetings, we tend to have more like status conferences. That way we just know the auditors are continuing to make progress. We know, where things stand, and kind of it eliminates some of the back and forth emails, so every
Yes.
3 weeks or so, we just set a regular call to make sure everybody's still in tune. Because it is very different.
Yeah, it's very different. I mean, we can actually still do the audit remotely. We're not like, I've heard from the auditor supervisor that, there's some mom and pop businesses. They actually have to they don't have that technology. So they actually have to meet somewhere in a parking lot and pass documents. So at least we don't have to do that. But just to keep that in-person interaction, I think, like you said, with regular calls and status calls, I think that would be very helpful. So thank you for those ideas. As far as other things, I think it's, what was mentioned, with Joe at Con Edison. I mean, sales tax, we really do have a lot of contact with other business units throughout the company, IT, procurement. I do like that. And I think it's just a matter of, keeping those relationships because they help so much in the audit. I mean, I know the audits, we have a lot of documentation issues. Our audit cycle is, a few years back, and there are issues where we, have some people in supply management, they've left the company, they don't have the documents that we're looking for, and we really need those documents. A lot of the invoices that we have for the larger construction contractors, they just say like milestone number 5, for X million dollars, and we have no idea, no breakdown, and we need all that documentation. And sometimes the documentation is not there, and we really need to have, good relationships with supply management to see if they can help us find what they can, or to, give us client or vendor contacts that we can reach out to as needed. So I think that's something I think is very important, to keep that good relationship with all the OUs or operating units within our company to help us with our audits. I think that's about it.
Well, that's a lot. Thank you, Esther. That was great.
Yeah.
Really appreciate it. I think up next we have Patrice joining us from Dominion. Patrice, if you're on.
Hi, good afternoon.
Hey, good afternoon. Thanks for joining.
Thank you. Again, I am Patrice Moore. I'm a senior tax accountant for Dominion Energy, and I am one of the team members for the non-income tax group, and I basically deal with sales and use tax. I was asked about this question, and at first I was not sure what to say, and then them and Emily suggested I talked about automation, which is, and I guess you could call me a tax techie, because anytime there's automation around, I'm trying my best, trying to learn how to use it and figure it out. It's good to know one of my partners in regards to tax technology, Claire Callahan, is on here. She was in this with me. How we got started with it is because one of our companies has a lot of data, and we used to review it manually. So that was like over 100,000 lines that we would review manually during closing, trying to finish 28 journal entries. And we were looking at a way to trim down this process to become more efficient, so we would have enough time to be able to analyze data and do research on certain transactions to determine its taxability. We were introduced to Alteryx during a meeting. We did a demo and absolutely loved it. At first, we started with Automation Anywhere, but did not find that that would be efficient enough or viable enough to be able to complete these journal entries. So we began using Alteryx and kind of self-trained ourselves, found out it was actually very fun. But after doing it for about a month, we were able to go ahead and automate these journal entries, which saved us about 8 hours of processing time. And then going forward, we began automating return processes and journal entries. moved on to other types of taxes as far as gross receipts, some of our federal regulatory reporting worksheets like the Schedule 15s. Also, we've taken some access database returns and put them into Alteryx to create a workflow. So this automation has been great for us. And now we've moved into Vertex to be able to do some of our sales and use tax returns and hopefully to be fully implemented by the end of the year. And it's great to know, Esther, that we have some of the same issues, especially in regards to the over and underpayment of sales tax based off of what is on the PO, the purchase order, versus the actual delivery address. We're running into that issue, but we have been looking at implementing the vendor recon to hopefully be able to try to rectify that situation. We also are under an implementation with Ariba for supply chain, and it would be interesting to find out if there is a way, because we also use SAP, if there's a way to, even before vendor recon is maybe implemented, to see if we could also come to a solution with that. So I would love to hear how that process is going for your company, your utility. Another issue and pain point that we have is in regards to supply chains purchase orders, which you've mentioned. They'll mention that one line on the PO, and we need more information and more description. And then another pain point that we also run into in regards to that is how are they determining the tax, how the tax is going to be done in regards to the project. We have some vendors who charge as we go along in the project, and there are some vendors who charge after the project is complete. But we don't know anything about it because it's never really discussed in the PO. So we're having to make calls or make determinations or pushing the buyers to tell us, what did you sign, or how is this going to happen in regards to tax. Let's see. I think that's pretty much all I have right now, but it's good to know that other companies are having these same issues and that we're not alone in this process. And I'm hoping that we can have some future dialogues and make some contacts along the way so that we can all join together and maybe come to some solutions for our companies. Thank you.
Absolutely. Thanks for sharing, Patrice. I think up next we have National Grid, and Brenda's going to lead the way, but Sam and Addie may participate as well.
Good afternoon, everyone. My name's Brenda DeCroce. I'm a tax manager at National Grid. Today, I'd like to share with you some audit lessons I've learned over the years with indirect tax audits. On my first audit, the New York State Department of Tax and Finance auditors told me that they are trained to treat questionable transactions as taxable unless the taxpayer can prove that the audit transaction is not taxable. That is their default position, which makes sense since the burden of proof is on the taxpayer. One of the first things I tell my new staff is don't think that the auditor knows all of the tax rules. They don't. Sales tax is very complex, and there are usually special tax rules related to a particular industry, including the utility industry. Then I proceed to give them an example of the first New York State sales and use tax audit I worked on, whereby the auditor requested a listing of all of our New York State utility office locations and substations. It was her position that we should be paying sales tax on electricity being used at not only our office locations, but all of our 794 substations. I wanted to verify that this was true, especially since my company was not paying sales tax on electricity being used at the hundreds of substations. When researching this issue, I found a New York State tax memorandum, TSBM 004S, that stated that there was, in fact, an exemption for electricity being used at substations. I recommend that the taxpayer is respectful and establishes a nice working relationship with the auditor. It will definitely help you in the long run. It is better to try to settle the audit at the auditor level rather than going to the next level, such as BCMS in New York State. However, sometimes it doesn't hurt to take an audit to the next level. If you are successful, it will help you on future audits. If an auditor is struggling to make a decision at his or her level, then it's appropriate to bring the supervisor in. If auditors know you are a heavily regulated industry, it may help give them comfort that the books and records are in good order, particularly knowing the company is being audited by the regulators. During the opening conference of an audit, I like to mention how the company is regulated by the FERC and the applicable state regulatory commission. In addition, I provide the auditor with a high-level overview about our business and provide them with publicly available information, such as the business section of the SEC Form 10-K. In addition to producing support for transactions selected under audit, I recommend looking for overpayments. The auditors are supposed to make sure the proper amount of sales tax was paid and therefore should be looking for both underpayments and overpayments. But based on my experience, auditors have identified very few overpayments. I also suggest that you request the auditor to offset overpayments with the underpayments, since the interest rate on overpayments is typically much lower than the interest rate on underpayments. For example, in Rhode Island, the interest rate on underpayments is 18%, while the interest rate on overpayments is only 3%. If a stat sample is being performed on an audit, make sure the auditor is calculating the projection properly. I have identified auditor errors related to the calculation of a stat sample projection in a New York State audit I worked on a few years ago and on a couple of current Massachusetts sales and use tax audits. On the New York State audit, the auditor used the incorrect population number in the denominator when calculating the error rate. Most recently, the Massachusetts auditor inadvertently calculated an incorrect error rate. She performed a detailed review of 1 month, but didn't use the total population number in the denominator of the error rate calculation. In both cases, the New York State and Massachusetts sales tax auditors corrected the stat sample projection calculations after we explained it to them. On a prior Massachusetts audit, we appealed the sales tax assessment calculated as a result of a stat sample on our electricity sales. We were only missing a handful of sales tax exemption certs, and the Mass DOR billed us over $1 million. In Massachusetts, by law, the auditors are allowed to conduct a stat sample if the taxpayer has voluminous records. In addition, the Mass tax law states that it follows the IRS code with respect to conducting stat sampling. I researched CCH and found some articles written by a PhD statistician who used to train the IRS agents on stat sampling. We hired her and were able to reach a very favorable settlement, in large part due to the fact that her credentials outranked those of the Mass DOR's part-time statistician. Another thing that I discussed during the opening conference of an audit is how our regulated utility companies are required to follow the FERC Uniform System of Accounts. This is key when trying to defend the fact that certain selected purchasing transactions are in fact part of a non-taxable capital improvement or construction contract. I inform the auditors that the FERC accounting rules mandate and define which expenditures should be treated as capital projects. In addition, I let them know that our regulated utility company must capture its capital cost using work orders. In addition, I note that capital projects require sanction papers, which must be approved by high-level executives. The sanction paper provides a high-level explanation for why the project is being done. So why is this important? When an invoice is selected under audit, the auditor may think the work being done is simply a taxable repair and maintenance work. The sanction paper clarifies what work is being done and supports that the work is, in fact, a non-taxable capital improvement or construction contract. In New York State, there is an end result test to determine whether a transaction should be considered taxable repair and maintenance work or non-taxable capital improvement work. If the end result of work being done results in a capital improvement, then generally all work leading up to that capital improvement would not be subject to sales tax, even though certain work would have been considered taxable repair and maintenance work if done on its own. For example, in New York State, landscaping work performed such as mowing lawns and removing trees is considered the taxable repair and maintenance of real property, one of the enumerated services taxable under New York State law. However, if such landscaping services are being done in conjunction with a capital improvement and the end result is a capital improvement, then such landscaping services are not subject to sales tax. So how do I prove to the auditor which landscaping services are subject to tax and which services aren't subject to tax in New York State? The work orders and sanction papers will provide the auditor with the information needed to prove if the work being done was a capital improvement. The other thing I like to point out to the New York State auditors is the 1993 New York State Department of Taxation appeals case involving the F.W. Woolworth Company. In that case, it was determined that expenditures performed by the retail company to rehabilitate its headquarters terracotta facade qualified as a non-taxable capital improvement. It was noted that isolated tasks, such as epoxy work to patch the skin, might be deemed repair and maintenance. However, the New York State Department of Taxation appeals noted that the activities must be viewed in their entire context, which was a major renovation project. The end result was a capital improvement. The evidence provided in the Woolworth case included not only expert testimony of the work being done, but also photographs of the work done. Photographs showing before and after pictures of work done is very powerful. In the first audit I worked on, I showed a before and after picture of renovation work being done in my office building, and the auditor immediately agreed that it was a capital improvement. A picture is worth 1,000 words. The last piece of advice I would like to provide you with is that you need to think like an auditor. The information the auditor wants may not be available, so you need to think of alternative ways to satisfy the auditor's request or concerns. There are tax regulations that allow you to provide the auditor with alternative documentation if the required documentation isn't available, such as sales tax exemption forms. So that's all I have for today. I hope this information that I provided you with is useful information that could help you on your audits. If you have any questions, I'd be more than happy to answer them. So thank you.
Thanks, Brenda. Oh, that was great.
You're welcome.
So this is our panel for today. We do have the Q&A functionality here. So if you want to ask any questions, it's kind of now's your time. We're going to move on. So one thing I was supposed to explain to everybody, but I forgot to, is that WebEx has this new feature that's supposed to make virtual meetings a lot more fun. They have emojis now. So it's this little smiley face in the bottom middle. So if everyone can give our panelists a round of applause, we'll move on to the next section. All right. Thank you very much, Joe, Esther, Patrice, and Brenda. We really appreciate it. So our next polling question, and again, please answer your polling questions, and now's a good time to remind everybody that you do have to check out at the end. So checking out is critical to those CP documents. So my company is going through a technology transformation, a new ERP, a new procurement module, moving to the cloud, tax engine. True or false? That, if you don't mind, how are we looking?
Yeah, it looks like the majority have responded A, true.
Yep, I see a lot of that. Between just the business case for new technology and then the fact that whatever technology you have is probably moving to the cloud. We definitely see a lot of that transformation going on right now with all of our clients. So with that, I am going to turn it over to Mike Senna, who introduced himself as a member of the Ignition Center, but I would like to say that Mike Senna started off as an indirect tax professional. And so don't let him fool you about the technology. He loves sales tax. It's near and dear to his heart.
It's the worst of both worlds. I'm half accountant, half IT, so I'm like a super nerd. Yeah, although I will tell you one thing, Scott, I never thought I'd see the day where you talk about emojis on a presentation, so that was pretty impressive.
I wrote a memo that included influencers the other day. I kid you not. Influencers were a defined term in the tax memo. So, the world's changing. We got to change with it.
Yeah, absolutely. And I can be honest, I mean, the timing in terms of us talking about technology streams was perfect because the one thing, I mean, great content. And again, thank you again to all of those who presented in the client Q&A discussion point. But I mean, the one topic I think everybody heard come up time and time again is technology and automation. I mean, the reality is there's a lot that's out there. There's a lot that can be done. There's a lot that needs to be done because we got to learn to do ultimately more with less. So what we're going to do today, just talking about technology trends, is we're going to talk a little bit about, the one thing I hear time and time again is, technology roadmaps. You've probably heard this until you're blue in the face, but I don't think a lot of people really understand what goes into a technology roadmap, or when we start talking about innovation and disruption. What does that mean? So we'll discuss that briefly, but then we're going to jump into technology trends and, more importantly, some actual use cases, because I'm one of those show me type of guys where it's like, yeah, we can talk high level about technology, but like, Joe, you brought up using automation. I think Patrice, you're the one that brought up using like Alteryx and whatnot. We'd like to go ahead and talk about some of those tools and even show you some of the things that we're doing either with clients or with our own internal teams to leverage technology to just help either do what we do faster or do more and better things with data and information that you're already gathering as a part of your current processes. So before we jump into that, I think we got a poll question. Yeah, and our question is so it's my indirect tax team spends X number of days manipulating data on a monthly basis. And the options are, 1, 2, 3 to 4, or D4 plus. I'm going to be really impressed if I see a lot of A answers. What are we seeing so far on the trend?
All right, Mike, looks like the majority have responded D4 plus with B2 close second. So
I highly commend those of you who have B as your answer, because that's good to hear. But the reality is and it goes above and beyond just our industry here, is a lot of clients, especially when it comes to sales and use tax, the beauty and the detriment of indirect tax is it's driven at the transaction level. It's great because you get a lot of detail. It also makes it difficult because you get a lot of detail. So when it comes to the volume of transactions, especially to the caliber of companies that you guys all work for, really becomes a challenge on how we deal with that. So we're going to jump in, like I said, we'll spend just a couple minutes talking about the whole concept of, you keep hearing innovation, you hear disruption, you hear tax technology roadmap, but what does that really mean? Like when somebody talks about we're putting together our technology roadmap, what are the different parts that make that up? Right. And so we kind of broken them out here into 6 different segments, 2 of which I kind of consider the baselines and the focal points. But then the 4 middle ones are kind of the things that are the things that are driving the putting together of a tax roadmap. So, again, above and beyond, a tax roadmap or technology roadmap is really to help drive not just the tax strategy in the right direction, but also try to find a way to get efficiency out of what we currently do. So again, how do we do more with the same or even less than what we had, a year or 2 years ago? So it's, being able to handle the constantly changing and unfortunately constantly increasing legislation and complexity around staying compliant with indirect tax laws. It's the pressure again to reduce the cost, but at the same time, how do we get more out of what we're doing with less people? There is that whole concept of, there's the disruption at the broader level. So it's not just tax that's going into leveraging technology. It's your supply chain. It's your distribution. It's, everybody's looking into how do we truly, redo, rethink, and disrupt what we do on a daily basis as an organization. And then, of course, there's the push for, innovation company-wide. Right, we all want to get better at what we do. We all want to leverage technology more. So tax really just needs to be a part of that. And Joe, like you had mentioned in your, your walkthrough, tax touches a lot of different departments. So we're going to have to play a part in that innovation path, not just for ourselves, but for a lot of the different parts of the organization. So when we talk about the details that go into a tax roadmap or an innovation or disruption plan, there's four main parts that we look at. And one was talked about pretty frequently. It's extreme automation, right? Again, doing what we already do and what we have to do, but doing it better, doing it faster, doing it quicker, getting it done with less resources. So whether it's implementing ERP systems to help drive the financial part of the business, whether it's using things like robots, you heard Automation Anywhere come up. These are robotics, and robotics is simply just a matter of taking something you have to do that's already done, clicking on screens, downloading documents, running reports, but having something come into play that automates it. So instead of you sitting there running it and having to wait for something to happen, why not let it run overnight, let an automated robot do it? You get in the morning and that process is done, right? There's also the concept of AI, right? So AI is getting into more complicated ideas where we can apply like near human thought process through automation into decisions that we make. So whether it's categorizing purchases or determining whether or not an exemption certificate is truly applicable to a certain customer or a certain vendor, right? That's when we start talking about, artificial intelligence and AI. Blockchain, a pretty new concept, a very big concept, is just this idea of what they call distributed computing. And what that means is rather than relying on a single point in like a process where maybe you're driving communication with your supply chain or doing vendor validations or whatnot, is kind of spreading the automation out so that there is a system that drives these where there's multiple points of validation, as opposed to, one person having to bring up an invoice and validate the vendor amount and the vendor's taxes, doing it along multiple series and multiple technology stacks throughout this process. And of course, mobile. I mean, especially for, we all have probably significant forces out in the field. Being able to leverage the tools that you've got and the tools that you need on a more mobile basis, especially now that most of us are still mobile, is absolutely essential. So, but then we talk about insights and analysis too, and that's not really automating per se. That's more saying, how do we get more juice out of the fruits that you're already squeezing, right? So you're gathering data, hundreds of thousands, if not millions of transactions that are going on under your control. And you're getting a lot of good detail there, but how do we use that data in a different way, right? How do we use purchasing information in a way that's just more than getting compliance completed and returns out the door, but evaluating your vendors and evaluating your supply chain to find maybe better ways to, decrease your tax footprint or increase the compliance in your tax liability. You've got organizational simplification, right? I mean, part of what we're trying to do is technology is great, innovation is great, but the more people involved in it, the more cooks that are in the kitchen, the longer it may take to actually make that meal. And so in looking at innovation, we want to make our organizations nimble. So when there is opportunities to come in and automate or implement technology, we don't want to turn into a 500-person affair if we can do it with 5 to 10 people. And then I think Patricia, you brought this one up too, is with skills and talents. Yeah, I mean, the tax resource of today, definitely different from that tax resource 10 years ago, which is, I look and say a lot of the resources that I see are truly successful in their tax departments are, I'm not going to say just as much, but pretty close to 50% IT as well as 50% tax. Knowing the tools that are available to help you gain access and knowledge to your data is just as important as knowing the regulations that your business needs to adhere to in order to apply taxability. So it's really those four main elements or columns that drive, what a technology roadmap is. But the key and basis of all of it is, while doing all this and getting innovative and being transformative, is we still have to make sure that we are mitigating our risk. We got to make sure we can be audit proof, or at least as audit pleasant as possible. Document management is absolutely key. Audit trails are absolutely necessary. And then, of course, we still have regulatory compliance to do, right? You have to make sure that SOX controls are still being adhered to and processes are being properly documented. So, again, when you hear that concept of a technology roadmap, I look at it and say these are the 6 main parts that typically drive what a roadmap is going to look like. But if we go to the next slide. So when we talk about technology trends, right? So trends are really just how are people bringing these technology roadmaps to life? And you'll see one thing that's on here is there's quite a different number of terms when you hear the concept of what are the technology trends or what are the big technology concepts that are driving this. And like I said, so this is a kind of a map that shows the different terms you're probably hearing a lot, but kind of classified in 2 ways. One is, what's the business value? What we mean by that is you've got items that you're doing for the sake of just making sure the business continues to run appropriately. And that's what we call more sustainable versus evolution and transformation, right? So when we're evolving things, we're taking what we already do, but just making them better, faster, right? As opposed to transformative, which I look at it and say, these are ways that you're completely reconditioning and completely changing how you're doing certain aspects of your business. Okay. And then our second axis is more the complexity level. So as expected, things that are usually more transformative are going to be a lot more complex, take a lot more time to implement. But what we're going to do today is focus just on a couple of these areas where, the KPMG team has seen, particularly with our P&U clients, a lot of attention and a lot of time being spent on those parts of their technology roadmaps. So the first one we're going to touch here is on basic automation. And what we mean by that is just the concept of being able to look at already existing processes and apply automation to those. So I think we'll go to the next slide. Okay. So one of the things I heard a couple of times, I think, Joe, you may have even mentioned this one, was the whole concept of automation or the processes around the procure to pay, right? Vendor DPPs, assessing vendor bill tax to see if it's correct or not. The one reason we wanted to touch on this slide was just one of the key items when we have discussions with clients about their procure to pay process and automating it is truly understanding that there are a lot more touch points when it comes to tax and process when we're talking about the end-to-end state here. More so than just, hey, I get a vendor bill tax amount on an invoice. I want to make sure it's correct or not. There's other parts in the process that we want to look at that would really help get your tax planning, tax validation, and tax reporting much easier and much more effective when it comes to the procure to pay process. So we look at it and say there's 6 main steps when I look at the procure to pay process, from starting with vendors and vendor management, through making the requisitions, through eventually putting out a purchase order, then getting the invoice fulfilled and receiving the invoice, all the way through your accounting and even to compliance, right? Because when it's all said and done, we're going to have to report what we did here to the various jurisdictions. So, but again, these are the different tax touch points that we've seen when it comes to implementing technology are essential to at least consider, if not add as a part of your technology roadmap when it comes to trying to automate the procure to pay process. So with vendor management, again, it's knowing that there's certain information that needs to be captured right up front, whether it's, exemption cert or DPP details, and making sure that's getting caught up early, because the more we capture up front, and more upstream, the less problems you're going to have downstream when it comes to vendor invoices and whatnot. From a requisition standpoint is providing the ability to capture the different types of items or services you're procuring, making sure that you've got enough tax documentation or documentation to understand not just what it is you're buying, but also, are we registered in certain areas, or do we have certain reduced rates? Again, this is going to be key to us really understanding down the line Are we making the right decision from an invoice perspective? At the purchase order, again, the key is being able to provide your vendors with some type of designation that says, hey, this is a situation where we either shouldn't be taxed or we should be taxed at a reduced rate. And again, that will help, downstream when it comes to the invoice, reducing the amount of disparity you have between what the vendor billed you and what you think you should have been billed in tax. Obviously, the invoice stage is still the key part of the procure to pay process, because there you're going to be receiving actual vendor bill tax details. You're going to be using systems and automation to validate that those taxes are correct. At that point, you're also going to establish some tolerances. You probably don't want to worry about a 1 penny, 2 penny variance, but you do want to worry about multiple thousands of dollars. And then again, just having a process where your AP department properly breaks out tax from the rest of the invoice. And then you have a system that allows us to validate that tax. So if a vendor is truly overpaying or overcharging or undercharging your tax, you've got the ability to capture it and the ability to take action on it. And then from an accounting and compliance perspective, it is, again, once you've had the ability to validate those resources, it's taking that information you've gained from your analysis and being able to identify any journal entries that need to be made, and again, do those in an automated basis so you don't have somebody 10 keying hundreds, if not thousands, of journal entries in, but also having the right information to be able to then report on your returns, any type of like assessments or use tax accruals that you have to do on underpayments, or again, refund opportunities that may exist because of your overpayments of tax. So any questions on that part? Okay, let's go ahead and jump to the next slide. And so this is our next poll question, which is a true or false question. It's, does your organization have an indirect tax automation application? So more often referred to as like tax engines. So whether it's Vertex, OneSource, Avalara, CCH, true or false if your organization uses at least one of those. Okay, how are you looking at trend-wise?
Looks like the majority have responded A, true.
Okay, good. Yeah, and I would definitely say, I think it's becoming a more commonplace solution. Most companies are utilizing some type of an indirect tax automation application, so that's good to hear. It's good to hear. So, okay, I think we can go to the next one. So the next part I wanted to look at in terms of this whole technology trends and these different terminologies, this is one that I think, or is near and dear to my heart, is the whole concept of data analytics. The reality is indirect tax is chock full of data, which is great if you figure out a way to harness it and utilize it. If not, it just becomes the burden of all burdens. And what happens is in a lot of cases where we're not properly utilizing technology to really hone our data and prepare our data in a way that's a usable format, you're going to find yourself in that behind the eight ball situation where you're struggling each and every month to just get the information you need to put numbers on a return and get it out of the door. But the reality is if you leverage some pretty simple tools, and some of them, our folks on the earlier client discussion mentioned, putting in place some of these items that are being ran by tax resources, you don't require an IT degree to do them, really harnesses and really enhances the power and capabilities that the tax department has into preparing the data that you need for your audit defenses or compliance, but also getting new vision into that same data so you're seeing trends and other things that you probably can't see when you're just looking at an Excel spreadsheet with 100,000 records. So one of the tools we're going to look at today, we can go to the next slide. Again, it's been mentioned a couple times, but it's the concept of Alteryx. And so Alteryx is, I look at it and say, if someone when someone asks me, how do I explain what Alteryx is? Alteryx really is very similar to Excel. It is a tool whose primary focus is to help you take in multiple data sources and stage them, prepare them, reformat them, just ultimately get the data ready for some type of process, whether it's compliance, whether it's an audit defense, whether it's creating a journal entry. Alteryx does that just much like Excel does, but the difference is Alteryx kind of does it in a more visual format. So if you look here, the concept of a file for Alteryx, so we call it in an Excel a spreadsheet. In Alteryx, we call that a workflow. But it's a single file that can be opened like an Excel spreadsheet, can be passed around through emails or through other methods like an Excel spreadsheet. But if you notice, instead of it just being a bunch of macro codes and a lot of coding that may require, again, more of an IT-centric person to understand it and maintain it, it's more driven in a visual format. So I always say if Microsoft Visio or PowerPoint and Microsoft Excel had a baby, it would be Alteryx, because it's data processing done, with click and point and dragging icons and whatnot. So you really do draw you draw your roadmap to preparing the data, right? But why workflow automation tools like Alteryx are key? One, empowered analysis. What that means is ultimately now, tax has the ability to do great things with their data. You don't have to rely on someone in IT and put in a ticket to get ad hoc reports done or data sets ready to go. You can automate them, right? I mean, that's the beauty is once you've built a workflow, much like once you've built an Excel macro, you can run it over and over again, which takes us down to that next one, which is repeatability, right? I mean, you'll spend time building a report that really does fulfill one of your needs for a weekly or monthly basis. The last thing you want to do is have to build it over and over again. Well, with macros as well as with Alteryx workflows, you don't. You build it once and you can use it as often as you need to. Tools like with Alteryx are particularly more powerful, I think, than Excel and other tools in the scalability. What I mean by that is Microsoft's got great tools, but their one big limitation is how many rows or how much data you can have. So with Excel, with the more recent versions, you can get to about 1 million records before the files just can't take anymore. But even when you start getting into the hundreds of thousands, those of you who have worked with large files in Excel know that those really big files start to get really slow, really hard to work with, right? Every time you click the save button, it takes 3 minutes to save. And so what's great about tools like Alteryx is you can work with some really big files. And I'm talking, I've seen files that are like 10, 15, 30 million records. And you can still run them through these workflows without having the problem of limitations of size or files getting bogged down because there's just too much data. They are easily transferable. So I mentioned just like an Excel spreadsheet, you can pass around a workflow automation file to anybody just like you would a document. And then, of course, there's the data and process governance and transparency. So the whole concept of this being a visual tool makes it a lot easier to see what's happening, more importantly, document what's going on. So as if somebody came in as your SOX auditor and said, I want to know what you guys do to prepare your data. Well, if you gave them an Excel macro with hundreds of lines of code, they're probably going to sit there and say, I don't get this. But when you look at a workflow automation like you're seeing here on the screen, it's a little more visual. It's a little bit easier to follow. The beauty is again, you can actually add commentary and documentation to this workflow. So someone doesn't only just run the workflow to get the job done, you can actually see what the job is doing through the built-in documentation. So, any questions on that? Okay. So we're going to go to the third part here. And again, it's actually 3 different concepts that we hear a lot of, but this is another area where we're seeing a lot of time spent with our clients, which is the whole big data, advanced analytics, and more importantly, the concept of machine learning. So that we can go ahead and jump. The concept of machine learning, for those of you who have probably heard it but don't quite understand it, is the idea of having technology and automation that once you've learned something, once you've made decisions or determined tax logic, finding solutions that can then apply that tax logic. So like, for example, we talk about the whole concept of vendor lists, right? If there are certain trusted vendors that you don't want to go and review sales tax on. The ability to take a list like that and put it in automation so that you now have a technology solution that can automatically spot that vendor and make that same decision of, leave it be, it's a trusted vendor on its own, is that concept of machine learning. In essence, it's kind of like having an intern in a computer. You teach an intern to do something, that intern can now do that for you for the rest of its days. And the concept of machine learning is that same thing. The concepts of big data and advanced analytics are, big data is just that. It's being able to come up with more holistic and centralized ways of gathering all of the data that makes up your indirect tax lifecycle, right? Whether it's PO details, vendor information, all the transactions, whether it's sales and billing versus your actual transaction with vendors and procurement. It's a lot of data that you're probably getting from 2 or more sources. So the concept of big data is, can we get this data into one warehouse so that we have the ability to run global reports and make global views without it, again, becoming too onerous. So one of the tools when we talk about the technology trends, particularly to this whole machine learning concept, I don't know if we want to go to the next slide here, is, again, so what we've got a lot of these cloud-based solutions, and I think I'm not sure, Scott, if it was going to be you or Patrick that was going to go into some of this, but so machine learning, especially with indirect tax, there is a lot that we do that's repetitive, right? Again, you buy from thousands of vendors, you buy the same items thousands of times over. Machine learning is particularly important to indirect tax because we need to get to a point where we can take the decisions that we already know are true and decisions we know we have to make against our information and find a way to apply it, right? In other words, you don't want to sit there and thumb through 150,000 invoices every month applying the same rules every time. So utilizing technology and cloud solutions, or even in Excel, right? Simple things like using VLOOKUPs to say, I've got a vendor list. So if this vendor exists in a list of do not process type of services, again, by having lists and automation like that, you're saving yourself the time of doing that every month and instead leveraging technology to do that. So machine learning and visualization really are key. And the example that we're showing here, you see a couple of screenshots, is a solution that we've been working on that we not only utilize internally, but also use externally with clients, which is our indirect tax automation platform. And what that is, really what the name is it is a platform that we use to help look at a lot of our indirect tax transactions and evaluate what's there. The focus is a little bit more on the purchasing side right now, but the concept is you have a system that, one, takes in all that data you've gathered and can apply machine learning to it, right? So if we've learned that this particular service or this particular vendor, because they always do one service for you, should always be treated as exempt or should always be taxed at a reduced rate. Systems like ITAP allow you to apply those automatically hundreds of thousands, if not millions of times over, without having to go in there and click a checkbox on each invoice and saying exempt, taxable, right?
What I see with my clients is, I tell them, if you're doing anything where you're spending a lot of time doing review work on a monthly basis, machine learning is a way to take those complex decisions that, may rely on purchase data, may rely on an invoice, and always are going to rely on some institutional knowledge. You start training the machine and you're transferring that knowledge over to a repeatable task. I think that's really the value of machine learning because, no matter how great your Excel, Access, Alteryx workflows are, you're always going to get to that decision point of, okay, I got to flip another invoice to figure out what's going on with this project. And this is a way to really take that invoice flipping and turning it into something that's automated.
Yeah.
You do train the machine. It's not, it doesn't go into, Skynet or, whatever from Terminator. It doesn't just disappear. Yeah. There's a human interaction of, okay, I'm going to review this if I agree or disagree. And so there still is that involvement by the indirect tax function, but there's just less time, to stage the data and then to apply everything that you already applied, naturally to that manual review process.
Yeah. And the consequence to that is then we talk about how do we do more with less? Well, if you have something that can utilize machine learning to apply the rules already apply. So those multiple days that you spent initially, like you said, thumbing through invoices and evaluating certain GL accounts or certain vendor numbers, that's all automated now. So that time now frees up, and what that allows you to do is one of two things. One is now you can evaluate those invoices for maybe new items, right? So the beauty about machine learning is, as you learn new things, eventually you teach the technology you're using those things, and that frees you up to continue to either find more issues that you may not have found in the first month or two, but also just frees you up so that now you've got resources with capacity, so that you could gear your time more towards analytics or more value-added activities, as opposed to just trying to take a bunch of data, thumb through it, make sure we've made the right decisions in time to get them on returns. So this really is going to give you that concept of doing more with the same, because now you'll have time to look at new issues or new items or analyze more, because you're not spending all your time initially just trying to apply taxability flags.
And you want to pull in different data, that FERC data that Brenda was talking about, or, work order versus ship to or work perform information that Esther was talking about. You can get those other data sources kind of, brought in and kind of blended in with your process.
Correct. Yeah. So I don't know, Scott, because I think our next slide talks a little bit about ITAP specifically. If there was somebody that wanted to go through there, I can go through
we can
that.
probably skip through it. I think we don't want to. I think the topic is machine learning. We don't want to talk too much about ourselves and more about the capabilities.
Correct.
All right. So the next polling question.
Let's go to the next poll question then. Yeah. So another true false. So my tax department has been challenged to adopt innovative technology and new forms of automation tools.
And I guess I should say challenged by leadership, not challenged to get it done. So I realize it's kind of poorly written.
We're all challenged to get it done, right?
Yeah.
That comes automatically with the territory. So
it's something you hear from your CFO, your CIO, your VP tax. Is that what we're looking like?
Perfect. How's the trend looking?
Right. It looks like the majority have responded A, true.
Okay.
Perfect. Now, you guys are okay. I'm going to go off script just for a couple minutes, because there was some discussion about, overpayments and underpayments. I just have a dashboard to kind of show what some of our clients, and when we talk about dashboards, right, and seeing data in a different light, I thought this dashboard would be a perfect example. So I'm going to share just for a quick second here. Let me find my share button. Because what this item here is a dashboard that's driven off purchasing data that we already receive from a client receives this as a part of their compliance process. And they sat there and said, this is great. We got detailed decisions being made. We can see where we think vendors overcharged us, where vendors undercharged us. That's all great. But okay, how do we start seeing trends, right? And so what you'll see here is, again, it's a dashboard that we've built. It's using the Tableau. There are a number of different dashboard tools out there: Power BI, Click, Tableau. You'll hear those terms pretty often. But so what this does is this is taking the same procurement data that the client was already using to determine where there are use tax accruals that need to be made and whatnot, but creating more. We call it our top 10 view. So with this data here, for example, I can go in, and I'm assuming this is showing on everyone's screen. Can you guys see?
I can see it. Yep.
Perfect. Okay. So, like, for example, we talked about, how do I look and see where my, which vendors are constantly, overcharging me tax? And so, like, in this case, what this data is doing, and again, this is driven by data that exists already in the compliance process that allows us to go in and see, okay, in this case, I want to look at my top 10 vendors that have charged me overpayments of tax. So what this does, like as I start choosing different elements, it is on the fly rebuilding a dashboard for me to see. Again, right now I see these are my top 10 vendors for this company that overcharged us tax. And as you start to click into certain parts of the dashboards, you can see more detail. So for example, we'll say Lewis and Ellis. Well, I'd like to see with Lewis and Ellis, okay, what, where exactly am I paying tax to them and overpaying that tax? So like in this case, when I click on them, you'll notice the heat map on the side is is updating to show, okay, well, they're overcharging us tax both in Texas and in, I think that's Indiana. I always get Indiana and Illinois mixed up. I got to get better about that. But so again, just when we talk about the concept of using similar data to be able to find different ways or see different things that you can't see when you're just looking at transactions, dashboards like this are really the key part of it. And this dashboard here was not built by an IT person. This was one of our, I think Patricia, you had said it was one of your tech savvy. You're a tech savvy tax techie, right? This was a tax techie resource. This is an indirect tax person that spent a couple of hours learning a Tableau tool and built this off purchasing data. So I'm going to go start sharing, and we can put back on the slide deck. Okay. So we wanted to spend the next 10 or so minutes going through some of just the use cases. So again, we've talked concepts, great. We've talked trends, great. What we're going to do is talk about some of the things that we've been doing for our clients, particularly in this industry, that show, again, this is us putting our money where our mouth is, right? Not just talking about automation, but what have we done? What are problems that we have solved with automation? So I think with our first case, we're going to jump into, you do the next slide.
And next slide. Yep.
Okay.
Thanks, Mike. Yeah, so we're just going to touch on this real quick, just because I heard Alteryx mentioned a number of times today, and everybody loves it. And to Mike's point, I think most people use it as kind of a workflow kind of automation software, but wanted to make everybody on the call aware of some of the other functionalities within Alteryx that, maybe aren't as commonly used. And so just a way of background, Alteryx was actually started as kind of a geospatial mapping software back in the early 90s. And it's since migrated into what we know as Alteryx today. But some of the functionality for what it was initially developed for included things like latitude, longitude functionality, geospatial boundary mapping, and address cleanup. So, what we see today is, a kind of a medium use of Excel and kind of IDEA and some other softwares to do, functions. There are some other capabilities within it that have a certain play in the power and utility space. And so if you want to go on to the next slide, we'll skip through these real quick. So, one is the capability within Alteryx to do CAS cleanup. It actually leverages information similar to the U.S. Postal System to do address cleanup. So, for example, if you had customer addresses or meter locations with, no zip +4 or missing the city or state, Alteryx actually does maintain information to be able to clean that up. And below is just a quick snippet of an example of that. You can go on to the next slide. So we've used this in a number of places, and I'll walk through an example here at the end, but just another way of kind of showing information that you can access within Alteryx is boundary maps and opportunity zones and all sorts of other maps that you probably didn't even know existed. And it would have the capability to transform information that you may maintain in your systems to kind of display it in a different way so that it can be used in a different manner. And this example, it was used for real estate expansion planning and looking for different areas, opportunity zones, et cetera. You can go on to the next slide. And this last example, again, kind of using lat and long information. So this is actually from a unrelated industry, but company that used motor vehicles and used fuel in a certain manner and had telematics data that would relay latitude, longitude, and time, et cetera. And Alteryx actually has the ability to take that information and map it within within the geographical map and within boundaries. So while this example doesn't necessarily translate directly to power and utilities, where I could see this coming into play would be, for example, looking at, maybe acquiring a new transmission distribution network or trying to map out where transmission poles in your cable may be and looking at it from a property tax perspective, or even a local sales and use tax issue. This is something that might be relevant. And if you have information like this available and are looking for ways to try to determine local taxes or sourcing in a little bit different way, this is something that may be applicable. And then one more slide. This last example is a specific use case where I think this might make a little bit more sense. So in Texas, there's a miscellaneous gross receipts tax that's imposed on the sale of utilities like electricity. The problem is this specific tax is only imposed when the customer's meter location is within an incorporated city or town. And as you can imagine, that creates a bit of an issue when you're looking at incomplete customer information that could be, to the tune of, 10 or 15 million records, in the state for determining whether something's inside a city or not. In Texas, that address information is actually populated by ERCOT, which manages our transmission and distribution companies in the state. And therefore, they have no incentive really to make sure that those addresses are complete. So, again, if you were to leverage incomplete data information and customer information, you're going to get the wrong answer from a tax perspective, which can create both liabilities and overpayments. Something that we're working through right now is creating a solution to leverage Alteryx's capabilities with both the lat-long functionality, the CAS system to clean up customer addresses, as well as the geospatial boundary mapping to actually clean up retail electric providers' customer information to determine the correct tax rate. And then just to kind of showcase again the capabilities within Alteryx to do that, they actually leverage information from the Census Bureau as the tax rate for this particular tax is dependent on the population within that individual city or town as of the last census date. And Alteryx actually maintains Census Bureau information to actually apply that population. So in a scenario where, you get, 1 million customers buying electricity and you need to identify where, 10% of those, customers are actually located because the information address that you're downloading from ERCOT is incomplete, you could leverage Alteryx to identify and spatially map those customer meters and get the actual correct tax answer. So kind of very specific for Texas, but I think you can look at the functionality of this to determine, okay, well, if I have any sort of local tax issue and identifying where something goes, whether it be a tower or a distribution network or a substation, or whether it be an electric meter, you may have some functionality within Alteryx to help kind of clean up some of those issues on a more large basis, right? When, again, with Excel, right, 1 to 2 million records, but when you're talking about utility meters or poles, right, you may be dealing with, hundreds of thousands and millions of different records in a given month. So no, we're running short on time, but I think that kind of gets the general gist there. You're on mute, Mike.
I think there's a question.
Yeah, I was going to say there is a question. So Stephanie, I think you had a question about the machine learning platform. I mean, we have a whole team dedicated to kind of onboarding clients onto our machine learning platform. And, they're powered by both a work plan, defined transition plan, but also we have data extraction tools. And we have, ways to, load different types of files into the machine learning platform that include PDFs. OCR technology is used as well, but, we have extraction tools, to get all the accounting data, to harvest all those invoice images and then just load that into ITAP, make all the right connections. So the data is transformed, into, a good readable format for, the platform and for a user of the platform. Mike, why don't we skip over print to forms and go to compliance transformation, because we only have a few minutes left.
Yeah.
While I'm talking, I'm going to go ahead and make a plug, finish the last poll question, and please check out at the end. Those are both critical things, but let's go into compliance.
All right, I'll kick this one off. So what we've seen over, I guess, the last year, especially with all the shutdowns, early retirements, different situations, is that indirect tax compliance functions seem to be making a complete transformation. We've talked a lot about technology, but with reduced headcounts in a lot of cases, or the push to do more with less, is how can we make this work? And so what we identify is several steps that can be taken to go through from a planning phase to a transition to delivery phase, along with a continuous improvement. So in planning, it's how do you, define your scope, go through a diagnostic process so you can understand exactly where you want your department to go, then actually go through the planning phase of making the transition, whether it's from calendar filings, reviewing all your filings, process development, customization tools, and reporting into actually delivering and putting that transformation in play into continuously monitoring and working to improve the process. I wish we had a lot more time because this could be way more detailed discussion, but.
Yeah, thanks, Emily. Yeah, we are kind of running short on time, but it's certainly, a big trend that we're seeing, and, that technology associated with compliance, either outsourcing or, kind of insourcing with, a lot more compliance technology is continues to gain steam, and something we certainly see, with many of our power and utility clients.
I just thought there one point is just the fact that, it's not just a matter of outsourcing or not outsourcing, right? I mean, the technology that, again, we have a very large outsourcing organization that provides outsourcing services, but the beauty is the technology that we've built and utilize there can also be leveraged for companies who have compliance functions in-house, but just want to have, get help in rebuilding or refreshing what that process is. So don't think of it in terms of just simply saying, well, I have one option, either do it as it is, or I have to outsource it to someone else. No, there is that medium where, again, we can help you determine technology tools that are out there that can be used to make your current processes easier. So there's a lot of options available.
So we have 1 minute left, and I know I don't want to go over on Cinco de Mayo, especially. I know you've learned one thing about today's session is that you're probably ready to celebrate Cinco de Mayo now. So, with that, I want to thank all of our participants today, everyone that presented during the peer-to-peer conversation. Those very great insights, and I'll share, all the participants with each other. I'll copy you all on the email, so you will now be introduced to all of your colleagues at the other utilities. Important note here, Yvette, go ahead and make the announcement, please, about checking out. Obviously the instructions are here, but we need your first name, last name, email address, and go ahead and submit in Poll EV so we can kind of close that off. And with that, thank you all very much. It was a great session. I hope everyone has a good evening and a good rest of the week. Bye.